Hey YouTube, this is Zach with Achilles Financial. Welcome back. We had another eventful day in the stock market. Today I am highlighting what we see here on the screen, which is some of the trades, and then I wanted to dive a little bit more into detail on what we are seeing occur with Uber and with Lyft. So going to be a shorter video today, but I think it's very applicable information. So the first thing that I'm highlighting, yesterday I did buy a Facebook call for 300. The reason for that is because Facebook has largely traded sideways this week, despite the fact we saw a breakout from Apple and we saw a bump in Microsoft and Facebook today. I purchased that for $138 that you can see here, and I sold that today for $164. So right at one point I was up to like 190 on this and I just didn't catch it on the sell, but I sold that today. And then as you can see, I also purchased and sold a LYFT put today. So I purchased that this morning for right here for $33, really close to $34. And you can see that I closed it here just shorter. And again, I sold my Microsoft call that I got at the beginning of this week. So took a loss there. And then two gains right there. So overall, pending what happens tomorrow, I currently don't have any open trades. But right now we are ending the week on a positive, which is always nice. Although I think my account balance is basically break even just because my stocks that are in this account are not having the best time, like Pfizer and Bank of America are not having a great week. But these are the trades that I made this week. And then we are ready to go take a look at what's going on with Lyft and with Uber. So as you can see here on the screen, I have a daily chart for Uber. And I want to highlight something here when we're looking at the weekly. There was one thing that I said in my video last week where I actually talked about Uber. And we talked about the fact they had an ongoing lawsuit and there was the expectation that the shares would go down in the future. I mentioned the fact that I'd like to buy more shares if they dropped under really the $28, $29 range. I actually said in that video that $29 range is the one I'm interested in. One of the reasons for that is if we go to the 2 weeks, something that we've talked about on this channel as well is the idea of Bollinger Bands and the idea that when a stock drops under a buy point that or under that lower band, it is generally speaking a good buy point. And as you can see, that happened today. Although, again, while these are good technical analysis tools, it's not really what I base my trades off of and really what I always use them for. What occurred today in particular was the fact that initially they said, hey, we're going to close down our driving platform. We're not going to be able to use this in California, which California is a huge market for Uber. That occurred at this point in time right here. You saw that drop. It was right about here that I purchased that put on Lyft. And I can actually show it to you better on Lyft because Lyft was doing the same thing. And as you can see, that occurred right here. So I bought one here, sold out on the little uptick here, and then it dropped a little bit farther. And then what actually ended up happening is they came out and a court pushed the date out or gave them their appeal, which means that they were able to continue operating for the foreseeable future. And as you can see on the screen here, they just leapt up. So this followed really the broader market now. But what ended up going from, I think it was like 2% down from open, maybe just 1%. But they ended up going and finishing the day at 6.5% positive. Whereas Uber was 7% positive, and we're still moving around a little bit in after hours trading. But this was crazy. This was a huge move. So admittedly happy I got out of my put option on Lyft as well, or as quick as I did, even though it was only a $3 gain on a $34 initial buy-in. So it was not anything crazy there. But the reason that this is so important is because California is a huge market. And one of the things that's important to note with both Uber as well as with Lyft is the fact that if they have to change how they are currently treating their employees, if they have to increase cost, Uber is, in particular, is not a profitable company. And Lyft is not really that much better off, although they have had profits in the past. So it's important to note that if these companies have to increase expenses with no applicable increase in revenue, that is not going to bode well for them. So the fact that they can continue to operate as they have been going forward right now is important for both of them. However, I do want to highlight that these stocks have still not necessarily done that great. I mean, Uber is still down on the year, and it's actually, I think we're well below their initial IPO price of like $40 is around where they were. Yeah, in May of 19. So they still are not exactly like absolutely killing it by any means, but we still have the capability to kind of hope that we go up from here. I am somewhat optimistic on Uber. I would have liked to buy those shares today when they dropped under $29 because I do think there's a lot of long-term value to Uber, but just not at this point in time because I'm still building out some other positions. And I still think that we may see a drop with the potential of a second round of coronavirus or what have you. Again, there's a lot going up in the air with these ride sharing, depending on do they have to treat their drivers like employees or this, that, and the other. So that is what happened today with Uber and with Lyft. I don't have any open plays at the moment, but again, at the beginning of this video, we reviewed all of that information. So if you have some plays that you would recommend or some stocks to watch, please drop those in the comments below. And if you found this content helpful, please drop a like and subscribe.